Kumar Motupalli, CMD of NLC India, joining us on the show right now. Very good morning and thank you so much for your time. And firstly, your recently announced Capex of 1.25 lakh crores. That's a massive one, especially in the renewable capacity. Help us understand that what are the key projects that you are aiming for this particular Capex, and along with that, how do you plan to fund such aggressive and such bigger Capex?
Good morning, madam.
Morning.
Madam, as on date, and NLC India is 6.7 gigawatt company, and we are targeting to take this to 20 gigawatt by 2030. Out of this, from the current 5.3 thermal to 10 gigawatt, and 1.4 gigawatt renewables to 10 gigawatt. So by 2030, our renewable capacity will be more than the conventional capacity. So renewable capacity, we are targeting to increase almost by 7 times. While the entire country and globe is targeting to double or treble their renewable capacity, we are targeting to increase our renewable capacity 7 times. So for all these capacity additions, we require a capex of 1.25 lakh crore. Most of this capex is for the renewable capacity and the green initiatives, the storage initiatives which NLCL is taking.
Okay, and also help us with a timeline, if you have one, for the capex that you have just announced, the 1.25 lakh crore capex, and help us with how you plan to phase this capex amount, and especially the 65,000 crore that has been separately earmarked for renewables itself. What could the timeline here look like?
The renewable capacity we are targeting to complete by 2030. The capex will be progressively we will be spending. So as on date, 1.4 gigawatt we are operating, and around 2.5 gigawatt renewable capacity is under construction in different states of country, Gujarat, Rajasthan, Tamil Nadu, and other places. So this renewable capacity, 5,000 megawatt, almost more than half of the what we are envisaging for renewable and green initiatives, that will be spent in next 2-3 years, and the entire amount will be spent in next 5 years. So by 2030, we are targeting to spend the entire amount and add the full capacity. And work is in fast progress in that direction.
Indeed, Mr. Motupalli, all eyes on that. But so how do you plan to fund this sort of a big capex? What sort of a mix are you working with, or you plan to work with respect to internal accruals, some bit of a loan, and maybe the IPO of your renewable arm? How do you plan to fund this capex?
What is this 1.25 lakh crore capex? We will be having 70-30 debt equity ratio for conventional plants and 80-20 for renewable plants. So we require around 22 to 23,000 crores of equity, and we will be funding this equity through internal sources. That is one point. And second, yesterday there was a cabinet decision allowing NLCIL to invest 7,000 crores in our wholly owned subsidiary, NLC India Renewable Energy Limited. So we will be going for asset monetization of our existing renewable assets of more than 6,500 crores. And then with the internal resources and with the asset monetization of the renewable sources, we are confident that we will be able to fund our capex requirement.
Okay, and let's just throw some light on individual segments now. In your entire capex cycle, help us understand if thermal and mining investments will be front-loaded, or would that be a part of some back end in this capex cycle? And how are you planning to ensure execution efficiency across such a large multi-segment investment plan?
Madam, NLC believes in a balanced approach in adding the capacity of conventional and renewables, while giving importance to the renewable capacity addition. equally we are giving importance to the conventional thermal capacity addition. That is the need of the hour for the country. So our Gatambur thermal power station is already one unit we commissioned, and 2 units are we are going to commission in the current financial year. And our Talabira thermal power station in Odisha, that is in fast progress, and we are expecting the commissioning of units by 28 to 29. And in Neyveli also, we are envisaging 2 into 1000 megawatt, 2 into 500 megawatt, the total 1000 megawatt thermal power station. So these thermal power stations, which we are starting now, they will be coming in 28, 29, 30. And the Capex spend, which we are spending, will be a progressive one. Mostly that will start after 2 years. But the renewable capacity which we are targeting, that is front loaded. Now, the next 2 years, there will be more than 70% of whatever capex we are thinking that will be spending in next 2-3 years.
The other thing that I wanted to understand that since by 2030 you believe that your renewable capacity will be much more than what the thermal capacity or the traditional capacities be like, but what will really can happen to your margin profile as well? Because in terms of the comparison, when we see that your margin profile is actually a little bit higher from some of those pure plays thermal or some of those pure play renewable companies, given such a large capex, how do you see the margin profile shaping up for the company, and between renewable and thermal and some of the other traditional capacities, which segment can help you the best way in terms of margins?
Madam, in our capacity addition, 10 gigawatt, which I was telling about thermal, that is the regulated one. And the mining operation, we are having combination of regulated mining as well as the commercial mining. And in there, the return would be around 15.5% post tax. And in renewables also, generally we target to have a return on equity of around 14%. So overall, we can expect a return on equity of more than 14%. Everything putting together.
And let's move away from your Capex announcement for some time and talk about your project pipeline. How is that looking like right now? Can you share some more details on your upcoming 200 megawatt Telangana and Gujarat projects and future PPAs that are in the pipeline at present?
Madam, as I told, already 2.5 gigawatt of renewable capacity is in pipeline. And out of that, around 300 megawatt solar, which we are installing in our own power station in Barsingsar, that will be completed by September. We will be fully commissioning that 300 megawatt by September. And first time in the country, we are adding renewable capacity on the mine reclaimed land of 50 megawatt. That we are expecting in the month of September. And put together in the current financial year, we are targeting 1 gigawatt of renewable capacity addition. And parallelly, we are working on the projects in Gujarat. 600 megawatt solar project is already under construction in the Khavda solar park, and 810 megawatt in Pugal solar park works are also in progress. Also, recently we formed a joint venture with Assam, where we are targeting to add 1 gigawatt capacity. Out of that, recently we got land for 500 megawatt already, and works are in fast progress. Similarly, we formed a joint venture with Rajasthan for adding 2 gigawatt renewable capacity, where the land identification process is going on. Putting together around 2.5 gigawatt we will be completing in next 15 months, and another 2.5 gigawatt by in next 3 years.
But Mr. Motupalli, lastly, just wanted to have your take on NLC Renewable IPO because that is something that the investors in the street is looking forward to. So, any timeline with respect to this that you can help us with, and how much time we can see this IPO really coming out and shaping up?
Yes, madam. We are taking it in fast forward mode, madam. Already we got exemption for the transfer of renewable assets from NLCAL to NIRL. The tax exemption we already got, and we are thankful to government for giving the cabinet decision yesterday for allowing us to invest the 7,000 crores in NIRL. That will facilitate in transfer of our renewable assets to NIRL. So we will be transferring those assets in the month of September, and we will be doing legal and financial due diligence by March 26. And DRHP is expected in the first quarter of the next financial year for the IPO.
Mr. Motupalli, great to have you on board. On that note, we'll let you go. Thanks so much for sharing your outlook and the growth plan ahead in terms of your capacity expansion as well. But with that, let's focus once again, throw some light on some earnings candidates.